One of my best trades that I've taken so far this year was a trade that netted me $18,000 in just 30 minutes. I was able to find this setup without using a bunch of trend lines and no bullshit EMAs or RSIs or stuff like that. Today, I'm gonna walk you guys through a simple ICT strategy that I used to find this trade in the first place. How I knew when to take profits and how you guys can apply this to your own system. Let's jump in. So this trade that I took was on February 13th. And the first thing I want to talk about before even getting into the trade is I want to rewind time and talk about my bias actually going into the day. So first of all, looking into the week, talking about where we are, I want to start to use kind of the tools of where I can assess my bias, where do I think the market's going to go, and start to then frame a trade from there, right? Because the bias is the most important thing to have. What's my bigger time frame draw on liquidity? So earlier in the week, we can see previous session from February 6th all the way up to February 12th, we were continuing to run price to the upside. Now, one thing I want you guys to notice when we're moving price to the upside is notice all of the generated liquidity that we're leaving alongside on the lows to the downside. Now, previous to the look to the left of us, we can see we have relative equal lows. This, when I see this, I immediately know this is going to become a future target. So we start working our way up, On Monday of this week, we finally start to see some form of manipulation. We end up taking these recent highs before getting a lot of displacement to the downside. This box here is a 4-hour fair value gap. So at this point in time, I'm starting to question, okay, I might be able to have a bearish bias right now, and I could possibly expect to see a market maker sell model to the downside to then go target those relative equal lows, but it's still a little bit too early. If we can get more selling pressure and more kind of downside move, I'll be able to start to figure out if that's the case or not. So we end up continuing to sell off, and this is when I can really start to get an idea of what price wants to do. Now that we've really displaced back inside this range, I'm confident to say, okay, this is a market maker sell model. This is exactly what I want to see in price. And when I'm looking at this 1 hour, and if I zoom out to the 4 hour as well, I can say I have a clear draw on liquidity being these relative equal lows. Again, we notice there's 4 reasons why price moves. Either we hunt liquidity, we generate liquidity, we are rebalancing inefficiencies, or we're rebalancing to equilibrium. Now, these are the 4 things I'm constantly asking myself every time that I'm looking at the market, because if I'm taking a trade, one of those 4 things has to be a reason for why I'm taking it, right? So just by looking at this and we start to question, okay, why would market even want to go to these recent lows? Well, we can notice we've been generating all of this sell side to the upside on the previous move. And if we zoom out even recently too, we've recently swept this previous high to the left of us. So what are we also doing on this move to the downside is we're rebalancing price to equilibrium of the range. If we go from the recent low here to the recent high on the bigger time frame, we can see price is retracing back to equilibrium, back to OTE of the range, and we're also rebalancing price back to inefficiency. So now zooming into the day, I can take a short, right? My goal is to align my bigger time frame bias with my internal time frame bias, and then I can get the most efficient price action and the best move I can possibly take. So this is the trade that I took. Now I do want to replay and talk about also kind of going into the morning here. So going into the morning, this is my target. This is my drawn liquidity. We're really close to taking this, but can I take a trade here? No. Why can I not take a trade here? Because number one, we just dumped 300 points in the overnight session. There is no reason I should be taking any sort of short here, because one thing that I need to constantly be asking myself is what has to happen first before whatever my bias is to actually be valid, right? Now, for my bias to be valid, if I'm looking for the market to go lower, what's most likely going to happen first? We're probably going to rebalance to this big inefficiency we have. We're probably going to rebalance to equilibrium. Again, remember the 4 reasons why markets move. So I'm going to let the morning start to play out a little bit, and I want it to be absolutely dumb clear when the market wants to continue towards this low. So market ends up opening. Again, right now I'm looking at the 5 minute. And again, the first thing that I wanted to see happen has now happened. We've rebalanced price to OTE. So now again, this is an area in which I expect to reject. I want to start to see some form of manipulation here. We continue to generate some more buy side before forming an SMT at these highs. And then we see displacement to the downside. Now, everything I've needed to see has now happened. We've retraced back to OTE. We've built some more structure. We now have an SMT at these highs, and we now have a market structure shift to the downside, right? We're starting to get displacement in favor and in the same direction of our bigger time frame draw on liquidity, right? The best setups that we're going to get is when we can align the external draw with the internal draw. So now I'm looking to take an entry. So what can I look for to take an entry here? Well, I notice we have a breaker to the left of us here on the 5 minute. So this is going to be where I'm looking to take my initial entry. Now, I want to talk and to give you guys a little bit of a masterclass on how I minimize my loss and maximize my wins so efficiently. Now, this is basically my pyramiding strategy. Now, normally when I have a high quality setup, I don't normally just enter my full size. Now, my full size personally is around 10 contracts. What I'll do is I'll enter around half of my size, wait for extra confirmation, and then I'll move my stop and continue to scale into a position. Now, what I'm looking for here is if I was to look at this, and let's say I'm about to enter 10 contracts. Now, we pull back, right? My entry is at the breaker, my stop is at the recent wick high, and my target is this recent sell side level, and this external low is my runner, right? So I want you guys to take a look at what the actual risk of this would be. Now, this is a fantastic trade. You do not have to pyramid. This alone is already a 4.5 risk to reward. That's a great trade to already take. But I want you guys to get an understanding of the amount of risk, and then I'm gonna show you how I actually pyramid and how it adjusts those risks. So if I was to enter my full size here with 10 contracts, or I think I didn't even enter my full size with this trade. I think I entered 6 contracts around. If I was to enter this with 6 contracts, my take profit is $20,000 and my stop loss is $4,500. Now, I have not had a loss this year more than $3,000. I have not lost more than $3,000 in a single day this entire year. Think about that. I've had 20K days, 18K days, 10K days, 5K days, and I have never had a day that is more than $3,000 loss. This is how we're gonna talk about it. If I was to take this trade and I lose, that's $4,500. How do I pyramid and even take advantage of this even more? So I want you guys to keep this in mind. Regular trade, 20K profit, 4.5K loss. Now what I'll do is I'll do this. My initial trade will be the exact same entry as what I normally would. My entry will be here, my stop loss will be here, but I'm actually going to be entering half of my size here. So let's say, again, we were looking before 6 contracts. So now I'm gonna enter 3 contracts. Now my 3 contracts is gonna be, again, $10,000 take profit, $2,000 loss, right? But what I'm going to do is I'm gonna wait for extra confirmation. Now, I can't zoom into the 1 minute because it's a previous trade and the date is not supported. But what I basically do is I see that market moves up, we tap the breaker, and we actually have an SMT on the smaller time frame. So this is giving me more confidence that there's no reason for market to really dig deeper into this breaker, and I'm gonna take advantage of that. So what I do is I then enter the rest of my position. Right when this SMT holds and we get displacement to the downside and we reject, I enter the rest of my position and I move my stop loss to this recent high. So now what happens is my fill gets averaged. Half of my contracts are entered here. Half of my contracts are entered here. Let me put a line in here so I can show you guys, right? And what I'll do is my fill gets averaged to these points in time. So I'm gonna move this around there, which is the midpoint of this entry and this entry, right? Because I'm entering another half position. So now I want you guys to look at my entry. I'm in now my full size, right? Looking before, if I was to enter with my full size here, it is 6 contracts, 20K take profit, $4,000 loss, $4,500 loss. But now I'm in even more size potentially. My take profit is now 18K and my stop loss is now $1,200. So now I minimize my risk by 60, 80%, and my take profit only gets, hit by a couple thousand. This is how I'm able to control such small losses and such big wins, is because when the market gives me an opportunity to pyramid, I will. And what will happen is I'll continue to scale into this. So for example, I'll enter another 3 contracts there, or I'll enter another 5 contracts there. And what will happen is I'll move my stop again. Again, if I was to add another 5 contracts there, my risk is still $1,600. Again, I could enter 10 contracts. I could enter 20 contracts. Actually, never mind. It's actually fucking broken right now. It's not working. 10 contracts would be a $2,000 risk. Think about that. My normal size of 6 contracts of what I would trade if I was entering this, that is a $4,000 stop loss. But just because I knew and I waited for an opportunity to pyramid and manage my risk, I'm now making an extra $10,000 and I'm now risking another $2,000 less. So this is how I'll be able to pyramid. This is how I can control my risk. So that's exactly what I did on this trade. Is I initially entered 3 contracts. I entered another 3 contracts. My fill got averaged. I moved my stop to the recent high. Super tight risk. Really good risk, and we ended up completely selling off towards the external draw. Now, what I want you guys to take away from this video is the best setups that you're gonna be taking are the ones when you can align the internal bias with the external bias, right? You're constantly looking for, okay, where does the daily candle want to expand to? Where do we want to go in the 4 hour, the 1 hour? And then that is when you can zoom into the lower time frames, recognize where the manipulation is, recognize when the market wants to go. Because a draw on liquidity doesn't mean anything if you can't recognize exactly when the market wants to go there, right? That's one of the most important things. So this was a great trade that I took. Again, in the target with the external draw, and now when the sell side level gets taken, this model is now fully complete. Sell side has been taken. This market maker sell model has now been complete. We've sold off. We've ran all of this generated sell side to the left of us. These equal lows have been taken. And then this is when we can finally expect, okay, price can maybe want to reverse. And as you can see, we ended up rallying the week after that happened. If you want to learn more about how people like Max and Debo were able to finally become profitable traders after years of struggle, you can check out the link in the description. Thanks for tuning in, and I'll see you in the next one.